Hello, everyone. Welcome. We'll just give it a couple of seconds for people to come in. Initially, I will apologize, Linda. I forgot to make you a presenter. That's why you couldn't get in. But welcome. Thank you very much. Um, just wait a couple of seconds and then I will give you my opening remarks. Right. Okay. Thank you all for joining. And thank you very much to the speakers for coming along and agreeing to speak with us today about the cost of living, something that's very much at the forefront of all of our lives. I'm Nick Caton, the chairperson of the Alliance for Finance, and we are going to be looking at how this cost of living crisis has affected people in our sector, but also in wider society, but also with a bit of a focus on what we can do as unions and trade union and staff associations to support our members, support yourselves as well, and potentially increase your offerings as unions and staff associations to the staff and colleagues. I'm delighted to say that we'll be joined by Deputy General Secretary of the Scottish TUC, Linda Somerville, as well as Samantha Wright from the Bank Workers Charity, Rhiannon Byers from the Money Charity, and Victoria Sutton from the Insurance Charity. This session will be recorded, but this time it will only actually be available for a limited time. Because of the nature of what we're talking about, we believe that the context is going to be very different as time moves on. So we just want to make that clear, that if you are recommending this to colleagues, etc., that it will only be there for a limited amount of time. And if you are looking at us in the future, please check that what we're talking about today still exists, and speak with either of the delegates that we have today about what you may be entitled to. I think we're all aware that steady rising cost of energy, fuel, and food has really started to pinch households, and we're hearing worrying phrases such as heating or eating, things like this. The government has even had to intervene again, providing support to households, but this is simply not enough for many people. There's been some minor encouraging signs from employers in the sector, as we've seen many financial institutions offering one-off lump sum cost of living increases or payments. But unfortunately, for many people, this is simply just going straight back into the energy providers' pockets. We have, however, after years of seeing 1.5, 2.5% pay pots, started to see more and more pay deals pushing double figures. But let's be honest, this is still a real term pay cut, as they're still behind inflation and by and large. In the finance sector, I think there's some unique challenges as well. Firstly, perhaps a public assumption that people in the financial services sector are financially secure, or even fully aware of their financial health. And perhaps this causes a reluctance for some people who are in difficulty to reach out for more support. This may be particularly true of those in regulated roles. So those roles that potentially the Financial Conduct Authority have to look at things like your credit history. And a black mark against your credit file may cause problems for people. So people might be more reluctant to actually reach out and admit that they're having certain problems. So I feel it's important, therefore, that we as unions and staff associations are there to support our members by being aware of what support is available and giving a safe space for those in difficulty to reach out to us when they might not want to speak to their employer, their manager, whoever it might be in their organisation. As always, my colleagues Kevin and Caroline are going to be looking after the chat function. This is actually an updated MS Teams, so I am going to be learning as you are with us. We have the chat function, so we'd like you to really share your experiences, your own what's going on in your organisation in there, and that may prompt some discussion. But also, if you have a specific question, we have the Q&A function there, which you can put your questions to the panelists through that function. So enough of my rambling. Without further ado, I'd like to introduce Deputy General Secretary of the Scottish TUC, Linda Somerville.
Hi, Nick. Thank you very much.
Linda.
Delighted. Can you hear me all right?
Yes.
Yeah, I'm delighted to come along this morning and take part in this. So thank you for the invitation. My role at the STUC is Deputy General Secretary, and in theory, I look after our political parliamentary liaison, our policy work, and our equalities. I've got oversight of all of that, but I also do quite a lot of our campaigning as well. It's a bit more interchangeable, the work that myself and our other Deputy General Secretary do. If you know the STUC, we're obviously the equivalent of the TUC in Scotland, and we represent over 560,000 workers across Scotland, across 42 trade unions that are affiliated to us. And the work that we do in Scotland, again, because our setup's a bit different because of the Scottish Government and the access we have to the Scottish Government. So we meet regularly with government. We have a positive working relationship generally with most cabinet secretaries that we would want to speak to, and ministers. And that's been the case since the devolved parliament was set up in Scotland. So a very different approach to, I think, some of the challenges that I think trade unions have generally trying to work and engage with the UK government. So that's the kind of context that we work in. Coming along to the Alliance for Finance meeting today, I mean, I don't really need an introduction to what this group is, because I've actually been to this meeting many times years ago. I was a farmer finance worker, and I worked in the finance industry for around 20 years. I worked in IT in a whole variety of roles, from application developer, systems analyst, IT business consultant, all types of things in various companies. And I haven't done that for a long time, but everywhere I worked, I was a trade union representative, often on secondment to the union, and certainly involved in the union all the time. And I saw the difference that unions make day to day, and especially when things are difficult. You know, we work for positive change a lot of the time in the workplace, and crunch point does come when things are difficult, not just individually for people and for members, but very much collectively. And I saw that, you know, years ago through the impact of demutualisation of the insurance companies, the arrival, particularly of the new commercial players, the retail companies that moved into the sector after deregulation, when you had Marks and Spencer suddenly selling credit cards, and, you know, Tesco setting up banks and all these things, and their marketing methods were very different to the rather sleepy sector that there had been before in terms of how they would actually compete together. And I actually remember working very, very long hours in IT when we got a contract in our bank to set up Sainsbury's Bank. And we were actually just rewriting, duplicating our entire online banking system, but changing a letter in it so it looked like Sainsbury's Bank rather than the bank that it actually was. So to begin with, they piggybacked onto all the things that we had, but what they brought was a very sharp commercial focus to the market that hadn't been there before. And that resulted really in a much more competitive outlook. You know, and we also then had the merger mania across the sector as companies then kind of gelled rather not very well together often after the financial crisis. And what we saw then was huge redundancies across our sector and restructuring. So, you know, I see the benefit that trade unions we need for trade unions in those particular times of crisis, you know, where the sector is so heavily impacted by what goes on around it. And the crisis that workers are facing just now, I think, has some similarities. It has similarities because, first of all, it's not of our making. You know, this is a result of the political decisions and their impact on the economy that has happened around us. And secondly, workers, it's very similar because workers are expected to pay for this crisis. You know, payment this time may not be at the moment in terms of massive job losses or redundancies, but it is due, you know, that's due to other factors really impacting on the labour market, you know, particularly around Brexit and COVID. You know, Brexit has left huge gaps in the supply of workers across the UK in many sectors, the NHS, hospitality, social care, but also huge areas of the private sector as well. And COVID has resulted in what we call or has been called the Great Resignation, you know, where workers have not returned to the workplace or have taken alternative career choices if they've had the opportunity to do that, and have revalued and reevaluated and rebalanced their lives in different ways, or indeed just decided to do something entirely different for other reasons. all too often because they had jobs that they just thought, I'm not going back to that. I can't face going back. And then there's the impact of long COVID as well, which we're only beginning to understand what impact that has had on our workforce. So the crisis has resulted in workers paying, but this time literally paying, not so much with their jobs at the moment, but paying out. You know, you just touched on there about some of the bills that people are facing as inflation has hit a 40-year high. But there's a real normalisation of this now, and I think that's one of my concerns to flag up going forward. You know, the headlines of cost of living crisis are beginning to fall away. You know, we're not seeing that so much as the big crisis in front of us, probably because there's a number of other political crises that we're all facing. But also there's a normalisation now of prices going up every week, a normalisation of this is just the way it is. And I think as unions, we need to be very careful that that does not become normalised. You know, in the same way as food banks have sadly become normalised and children collect parcels at school for their colleague, for their other schoolmates, you know, these things have now, and heat banks, I mean, are now becoming normalised within our communities in church halls and elsewhere. So I think we need to be very careful about normalising this economic situation, because it is not, and it is a result of political decision making. And workers are also paying for it through, you know, their food, fuel, housing, childcare and energy costs. I mean, these are all essentials. They're not luxury items, and yet workers are also entitled to luxury items. People often talk about, you know, why do people spend extra money on X, Y, and Z, or do they think they can really have a holiday? Well, yes, they do, and should be able to, you know. Work should pay enough for people to have a good quality life. And so it's not just about covering the essentials, but being able to have a good quality life. And at the moment, we're very far away from that, with workers across every industry struggling to cover the essentials, let alone moving on to do any of the extra things. And I think when some of the debt, I think just now, has been hidden, we're not really seeing it coming through yet into credit cards. That's beginning to happen. A lot of the credit card spending that we were beginning to see, I know I looked into this over last summer and a lot of the statistics, it was beginning to show up in a rise in personal debt, but yet there was no purchases for it. You know, new car sales are not up, people are not investing in, you know, lots of different things. So the money is being borrowed on credit to actually pay bills. And that is worrying, because we're stacking up problems for the future. And I know there'll be other people on the call that, you know, will be very experienced in dealing with the results of that for both individuals. So whilst this is generally called the cost of living crisis, it can also be seen a couple of other ways. It can be seen as a crisis of the cost of profit, because it's very evident that there's an increase in profits amongst huge areas of the private sector, and especially the energy companies, who have reported again just last week record profits, like the biggest profits they've ever made, as people are struggling to heat their homes. So again, there's a normalisation in that language that, like, oh, it's another record-breaking quarter for the energy companies. You know, meanwhile, we're looking at, you know, money goes straight again from the government back into the energy companies, as we're told that our bills are capped. They're not actually capped. We're just, you know, the money is being transferred straight over to the private sector. And another way to look at this is actually the crisis in wages, because it is a crisis in income and wages. You know, workers in the UK have had 2 decades of wage stagnation. You know, the evidence shows that wages have not been keeping up with inflation. And it's only when inflation begins to take a sharp rise like this that we then see the impact of that. So last year at the STUC, we saw this as a priority for our unions, particularly last spring, as we approached our own annual congress, and we found more and more unions were having to look at taking action around cost of living. You know, and we first began to look at double-digit inflation, and people were horrified that that was happening. And as I say, there's now a normalisation of that. So we set out a plan for what we would do to try and support our unions in Scotland and support workers in Scotland around the cost of living. And we recognise that whilst our, you know, bread and butter is indeed industrial issues and is to do with wages and what was in the workplace, this was a cost of living crisis that impacted beyond that. It impacted every household and across all our communities. So we set about building a coalition. So we weren't doing this on our own, and it was seen as workers taking action. And somehow workers, when they take action, are seen as not your neighbour and not your aunt and not the person, you know, that you meet at the bus stop. They're seen as othered in some other way. But we went out of our way to try and build a coalition, and we worked with the Poverty Alliance in Scotland as a key partner, and they represent 300 different organisations all working across Scotland in communities. We worked with them, we worked with our own Trades Council network, we worked with a range of charities, the Trussell Trust, and others that we brought together for a conference of about 120 people last June. We spent the day looking at the key subject areas: fuel, food poverty, housing, wages, thinking about jobs, thinking about, what was the impact that the cost of living crisis was having in all these areas. And we had specialists in the room, and we had community leaders in the room, and we had trade union representatives and members in the room. And out of that, we then developed a plan for action, and we kept it as simple as we could. We kept it in a format that was easily understood and easily, shared with people, because all too often doing jobs like this, you can end up speaking in some policy language that really just doesn't translate. And what we called for, and we made it things that Scotland could do, the Scottish Government could deliver on, because obviously employment legislation is reserved. But there are things that we knew Scotland could do, and that was around a real pay rise for public sector workers, developing a social security system that loosens the grip of poverty, because Scottish Government has increasing powers for delivering social security in Scotland, but not full powers. We talked about warm homes, particularly through municipal energy companies, because we've got a long-standing campaign around just transition and taking the profit out of energy. We talked about sustained action to tackle rent costs. And we talked about sharing the wealth, which is a conversation that's not really happening. Everyone's so focused on wages. We need to think about sharing the wealth. And we talked about that through income, through new income, wealth and business taxes. We talked about universal free school meals. It's a long-standing campaign that we have, particularly led by our Women's Committee, trying to make sure that we get free school meals as one of the easiest ways for governments to put directly support families in need. But if they make it universal, we take away all of that stigma. We also talked about our demands for cheap, publicly controlled public transport across Scotland, again, as part of our Just Transition and our green initiatives in Scotland. Support for childcare, which is one of the extortionate factors that families face, and the enforcement of fair work. The Scottish Government are committed to fair work, but we need that to be more than just a framework for it. We need it to be a reality. So these were the campaign and actions that we decided to take forward. And as I say, we built a very broad coalition around that. Beyond that, we then built a lobbying strategy where we looked to work with individual political parties in Scotland and individual politicians and councillors. We held meetings with groups of councillors as well to see where we could get impact, where we could, before the next budget that the Scottish Government set, recognising that some of their fiscal constraints that they're under, where we could actually get some mileage in that. The lobbying strategy also, we have direct access to Scotland's First Minister, to all Cabinet Secretaries. So in these routine meetings and in particular meetings, we made sure that we argued for these things and that we supported other organisations that had a similar agenda to ourselves to take this forward. We had support from some areas of the Green Party, the Green Party's trade union group, and the Greens are in government in Scotland, which is not always recognised through a joint agreement with the SNP. We have a very active and supportive SNP trade union group in Scotland, which we work with regularly as well, which has around 12,000 SNP members who are in trade unions that we work with. And then obviously with the Labour Party in Scotland, who share much of our agenda. So we worked cross-party, across the Parliament, to try and get these things on the agenda and to make sure that we had, MSPs in the Parliament taking forward different key parts of this. All too often, Scottish governments say to us, with some sincerity in places, I'd like to do more, but we can't pay public sectors more. We're curtailed by the financial pressures that we're given. We can't raise our own funding. We can't do any more because we're not independent. And we hear that all the time from Scottish Government. So we thought that we shouldn't really have to do this work because it is up to them. But we thought, well, we'd try and answer that question for them. So we commissioned some external research last year for one of the only 2 or 3 organisations in Britain that actually has a taxation modelling system that they can use that can actually work out progressive taxation and its impacts and how it would actually impact right across all of the different ratings. And we commissioned them to do some work for us last year. And we launched that research in November. So as well as building a coalition, we were now building a strong evidence base of what more could be done. And out of that, our main focus in that was to actually say to government how they could fund a pay increase across the public sector. And we tamely looked at a 5% increase when we first commissioned this, a 10% increase, a 15% increase, or indeed a 20% increase. What would that cost on the employment bill across the public sector? And then how could actually government deliver it? And we looked at different options for what they could currently do within their own powers, how they could change the higher rate threshold for tax, how that they or reduce the higher rate threshold down to 40,000, how that would bring in extra money, how they could introduce a new top rate threshold. So that would introduce a new top rate threshold that would also bring in extra money, and introduce a new income tax band altogether, or 44%. So we looked at a variety of different ways, particularly in the top bands, of how we could change the bands, or we could alter their band levels in order to bring in extra cash. And whilst the government could do that at the moment, and it is a progressive way to do it, it actually doesn't bring in as much money as you might think. What we also then looked at is where else therefore government could bring in money. Now in Scotland, we have council tax, and the council tax has not had the banding rates, which is the valuation of your house, and the banding rates within that changed now for almost 4 decades. There is no other taxation system that has lay unaltered for so long and completely out of date. So we went to government and we made them proposals for both changing the council tax, simple proposals that they would just have to reevaluate, reband, and more complex proposals around replacing the council tax with a proportionate property tax. So these are things that the government can do right now and could do through the budget. We also then looked at what might be new taxes that they can do within the powers they currently have. So powers around wealth taxes, where they could introduce various taxes that had good distributional impacts to make sure that we were not discriminating against people or having that knock-on effect that you can have where you change one tax and the whole household then goes backwards. We made sure that that was fully costed. We also looked at land value tax and other sources of income that we could bring in, you know, changes to domestic rates and a variety of other things. So we've presented all of these to the government last year along with our costings. You know, immediately they could have got about £1.2 billion, we reckoned, and over the longer term, £3 or £4 billion, depending on what they choose to take forward. So we gave them the evidence, and some of that, we know I've sat in meetings with the Deputy First Minister, who's currently in charge of finance in Scotland, and looked at how we could begin to take these things forward. So we're trying to drive an agenda here that says, you know, we need to do more for public funding, for our public services, and for public sector workers. And that does have a big impact on the private sector, because all too often it's the public services that we rely on, regardless of where you work, that are also in free fall right now. If your local authority can't afford to do certain things, then these are things that families are also struggling with. And there's a disproportionate impact on women who are much more reliant on these public services as well. So we're trying to kind of address that from a whole variety of things. I mean, we've called this a humanitarian crisis because we actually believe it is. You know, people's lives are being lost because people are having to make terrible choices about how to look after themselves and heat their homes. So it is a humanitarian crisis, and we are demanding from government and from employers that they step up and do more to address this. I mean, the last bit of work that we've obviously done, again, with other trade unions, you know, on this call, is around supporting workers who are taking action. And we've never seen industrial action at the levels that it is for decades. And I've been around all the picket lines, visiting whether it's university lecturers, our teachers in Scotland, speaking to postal workers, the outreach workers, the rail workers, local authority workers last summer. And you hardly find someone who's been on strike before. You know, the workforce is a younger place, and most people have never been on strike before, you know, and nobody wanted to be. You know, one of the things that's happened, it's a last resort, you know, for people to go on strike. It's not the first thing that you would choose to do. It's a failure of negotiations from the employers if workers end up taking industrial action or even threatening to take industrial action. And what we've ended up with is a situation where many groups of workers are finding that the only way they can get their employer to put a half-decent offer on the table is to threaten industrial action and to go through all of the legal challenges that there are to make that potentially happen. So I think there's a reflection here that as some of these disputes are now coming to an end, and I know not all of them are settled, but you know, eventually things are resolved, not always perfectly. But as they're beginning to come to an end, we need to reflect and say, what lessons did we learn there? Why is it that employers thought there's something wrong in the industrial relations setup, that employers thought it was okay to sit back and do nothing until workers were, you know, threatening industrial action or in a position to take it or taking it before they made a half-decent offer? You know, some of those offers haven't, as I say, are still very much being discussed. But what we have seen, where there is profit to be made, and there's plenty of it out there, I'm sure, as you know, is that, you know, the impact that we're seeing of trade unions, organised trade unions, who are delivering for members. You know, just last week we had Liverpool Dockers getting 18% pay rises. We've had local authority workers in a variety of places getting 15, 17, 18%. We've had hospital workers getting increased pay rises, some of them 30%. Airport staff at Luton have won increased pay rises as well of over 20%. So in areas of the private sector, particularly in transport, logistics, haulage, there's been lots and lots of increases well above inflation. And some of that is actually just about redressing the abhorrently low pay that there was in some of these sectors anyway. So we see that the way out of the cost of living crisis isn't on an individual basis. I think it's unfair when we say to people, well, if only you turned your heating down, and if only you shopped differently, and if only you did something differently. It takes away the responsibility that actually employers have and that governments have to address this crisis and to make sure that workers and communities are protected, not just today, but beyond this. So thank you.
Linda, thank you so much. It was really interesting, and I think you're right. I mean, the level of action that we've seen from unions, I haven't seen in the time that I've been at trade union, which is about 17 years, and it is kind of frightening to think that it's been pushed to that point where, you know, strikes are back being on the front page of the newspaper every single day, and you know, even we have had to take action once, which is just not in our nature at all. So I guess I wonder if out of this, your thoughts on whether or not there's been a little bit in the past of unions being, as membership has reduced, maybe being a little bit apathetic to industrial action, but that now it's kind of focused some unions in thinking, actually, no, that enough's enough. We're pushing back now on that. Is that something that you're seeing?
Definitely. I mean, you know yourselves as reps in the workplace, is, you know, activity breeds activity. You know, when unions, I mean, we saw decades ago, trade unions very much have a servicing model where they were there to service individual members with a variety of representation. If you were in difficulty, your union was sold to you almost as if it was an insurance policy, and indeed then your union did sell you insurance policies. You know, so, you know, when people buy into a union simply for that reason, then if they get better offer, they'll go elsewhere. So I think there's a change in trade unions, which has been a very welcome change to take on the organising agenda, to say this isn't about recruitment, it's not about numbers, because what you need to do when you leave a workplace, when you've recruited people, is you have to build something sustainable behind you. So it is about moving to a much more sustainable organising model. And I think that's something, there's been an influx of members into trade unions because of the mass activity. People realise that unions work and unions win. And unions aren't me or you, you know, they are workers coming together That's the most important thing as well. You know, we encourage people to join a union, but to be active in your union, because that's what the union is. It's not some external force that comes into the workplace and, you know, fixes things for people. It has to be sustainable within the workforce. So yes, definitely, I think there's a conversation now as to, after this wave of activity, should we be coming to an end of it? And I'm not saying we entirely are, far from it, but, you know, there's a renewed confidence amongst workers. But also then, how do we make sure that the gains people have had this time, you know, saying often it's not actually that much financially, it seems like big numbers, but it's just getting them into the right foot. And how do we then move forward on that and look at some of the other areas that we want to expand into?
Yeah, no, absolutely. Well, I'll open it up to the floor if anyone has any questions. Kevin, Caroline, I know you've been having a look at the chat. I'm not sure if there's anything has come through, but we've got a hand up from one Fiona Steele. I should be able to, bear with me, put you on screen, Fiona.
That's it. Oh, great. Thank you. Thanks, Linda. That was great to hear all the great work that's going on in Scotland. Just wanted to pick up on the food poverty aspect of it, because I know that when you're at your shopping basket is sometimes about 50% higher than it used to be, and the prices are escalating, and a lot of the packages are smaller than they used to be. So do you see that the prices ever reverting back to what they were? Because usually when prices go up, they stay up. So that's just, you know, how do you see that playing out in terms of, you know, when we're coming to the end of this crisis?
No, you're absolutely right. I mean, it's called the shrinkage economy, isn't it? Where they've been doing that for quite a long time, is making things feel that they're the same price, but actually you get less for it. And because people don't follow closely, a lot of people find it very difficult to monitor these things, you know. They don't always follow it. You're right, prices generally do not go down. And therefore, you know, the inflation that we've had with us may well stay. House prices may well drop. Rents, that again, it's a supply and demand. It's the strangest market ever, is both housing markets. You know, how do you value a house based simply on nothing to do with its nothing whatsoever to do with the bricks and mortar, but simply on the exact price of the last similar item that somebody was willing to pay for it. You know, so these things all sit outside normal markets, as it were. The food's also been disrupted, obviously, by some supply issues again, but no one's willing to talk about Brexit. But you know, there's a lot of supply issues there as well. So there's something there about longer term. And really, visionary government would be thinking about, how do we make sure that we have food security, you know? And that's not about saying that we wouldn't take part in important things. Importing, not important, but you know, we need to make sure that we actually can be sustainable. And how can we make sure that we have food security? But ultimately, it comes down to people. If price inflation is one issue, we've talked, sometimes there's a hint that wages are driving inflation. I mean, I think we'd agree that that's not true. And certainly the evidence, if anyone says that, you know, the evidence there is the wage price spiral that you do sometimes see is not evident. That has not happened. And these inflationary factors are to do with prices going up, particularly fuel and other prices that there is. So I don't think they'll drop away. There might be some shifts and things, but I don't think they'll drop away. What our job is to think about, how do we make sure that when workers are in a position that they have good quality work, and that actually people are paid appropriately, you know. So these shifts in the economy sometimes they won't be reversed. There might be a different stage.
Thanks.
Thank you. I mean, I was wondering actually, Linda, your thoughts on whether or not there is something that can, I mean, is it too much to force big companies and to share their profits? Is that moving away too much from a free market economy in your thoughts? So I mean, you know, what can be done in that space?
I mean, I suppose there's different things that could be done about it. If there is to share the profits, do you mean profit sharing back to workers? I mean, lots of companies have these schemes. Are they helpful? I mean, I'd take you back to the financial crisis. All too often people I worked with in the finance sector and members across tens of thousands of people, workers across the financial sector, lost out badly, not because that they were, rich, they weren't wealthy, they were workers in call centres, they were workers in back office functions, but they had been actively encouraged by employers weekly, daily, to take out more shares, to buy shares, to take their bonuses in shares. They were given free shares. They had share swap schemes. They had every type of scheme. The price of the share sat on the corner of the internet, in the intranet, and it made it look like what the price of milk was, So it became normalised for workers to have shares rather than potentially have cash bonuses that they would pay tax on, or maybe not even have bonuses and have better wages. That's a whole other conversation, And overnight in the Royal Bank, overnight in a number of big companies, these things, people's pension funds, sorry, not pension funds, but their pension savings, people had lost out their plans that they had for family events, for huge numbers of things. People went from having £10,000 stuck away in shares to having what would have been £1,000 because the price of the shares dropped dramatically during that time. So in terms of sharing out wealth or profit in that sense, it's highly risky. The other way to do it, as I say, is for taxation. And there are a number of taxation options that governments can look at, which, does that move away from the free market? Well, maybe it's just one of the checks and balances that it could be in a free market. The UK government are not going to move away from any big free market model, but there are checks and balances that can be brought in. And as I say, we address this as a humanitarian crisis. And when we think of the things that other governments have done, in France, they've looked to tax energy companies in a different way. So, countries do respond. There are things that can be done, as we saw during the COVID pandemic with emergency legislation. This is a humanitarian crisis, and therefore we would ask our governments to step up. And part of that is about saying who's making profit just now and how can that profit be redistributed.
Thank you very much. Kevin, anything else from yourself? Or
no more questions have come in yet. I suppose I've got one, if I may, Linda, and this shows a bit sort of my background as well. But I just found it fascinating what you were saying when you visited picket lines, and that overall comment of people had never done this before, never thought they would do it. And I suppose what we need to do is just take a moment to think, actually, that's the problem the other side as well, isn't it? Leaders have been living in that economy that you were talking about and thinking about profits and shareholders, etc. They haven't considered these issues before, and they need to. It needs to be put on their lap. You had people in, I guess, HR or HR related who hadn't experienced this sort of action before, and so were they able to draw on a good resource of knowledge in order to respond to it? So do you have hope that actually, because of what's happened, similar to back in the 70s, that actually things should be learnt by organisations and by the financial sector, and so responses will be mitigated, different, improved from the trade union point of view in future?
Yeah, we have hope. That's why we all get up every day. The reality of it, I don't know. But I mean, it's up to employers to, as I say, reflect on what lessons can be learned. We've got some employers that, if we look at some of the, I was at a meeting in Parliament yesterday and somebody called the Royal Mail a rogue employer. Who would have thought that Royal Mail would be considered a rogue employer now? But their practice that they have had that has led them to both the dispute that they have and the way that they have conducted, management have conducted that dispute. I mean, there are, it's publicly available information that there are hundreds of workers that have been disciplined during this dispute, all too often union reps. So the industrial relations model that they have in that organisation, and it is a private company, is not working for anybody. And that is going to take a while to reset and resolve. We also need, I think, therefore, a clearer steer again and some legislation from government. You know, we had fire and hire last year as well, where we had fire and rehire, where we had the P&O scandal, you know, which was a scandal that even the Tory government were worried about at the time for 5 minutes. You know, and then suddenly nobody was worried about it again. So, you know, if we have employers who are behaving, and, you know, big employers, this isn't, you know, some kind of, I don't know who would, no one should be doing that, but you know what I mean? Like, these are national organisations that we all are familiar with, taking those type of approach to industrial relations and how they treat their workforce. There's something significantly wrong in our employment legislation and protections for workers that means that we can't protect people. So longer term, you know, building an organised, when unions, I think unions now need to think about what do we do next if we do have this, you know, influx of people have seen that unions work and that unions win. How do we then begin to take that forward? And as I say, that's about people staying involved in their unions and trying to learn lessons with employers to say, you know, we don't want to be in that position again. In Scotland, the Scottish Government has actually just made an offer for health for next year because they don't want to get to the brink. So, you know, that's out for ballot at the moment. So employers thinking what they can do proactively to stop that type of thing, you know, and having good industrial relations and treating your workforce with respect. It's not that hard.
Thank you, Linda. Nick, I'm going to pass the next one over to you because I think it's a great segue into where you're going next.
Yeah,
we've had a question in.
Yeah, absolutely. Thank you, Mike. Thank you very much, Linda. It's really, really interesting. I know that you have other commitments, so you know, as and when you need to drop off, then please do. But just all of our thanks go with you. So thank you for taking the time to come along today. Yeah. So Mike has put in the chat there that you may be able to see that actually having more money is only part of the answer. Given that many companies will only be able to give a certain amount of pay, and he's really interested to see what tailored individual guidance, advice and help can be offered to employees so they can make better use of the money that they do have and what services benefits they can access. Now, just so happens that we have 3 individuals coming from various charities that work around the finance sector or specifically about financial awareness and health. So I will pass over first of all to Samantha Wright. So Samantha, do you want to just introduce yourself to everyone, and I will leave it to you.
Sure. Hi everyone. So I'm Sam, I work for the Bank Workers Charity and in the marketing team. So what I'll do is if I just share my slides here, and then I will go through a little bit about what we do. So for anybody that's not aware, or if you do know us, hopefully you will be kind of a bit clearer about what we do. And then I'll kind of touch on cost of living and how we're supporting people around that as well. So essentially, we were founded a long time ago in 1884 by a group of bank managers. We are considered a benevolent fund, we still are. So back then it was very much about grants and financial services and financial support. As the years have gone on, we've significantly changed how we support people, obviously to reflect the need in our community. So we now offer advice, information and support alongside the financial grants as well. We do sort of work very closely with the banks, but we are completely independent as a charity. So when we do work with the banks, obviously we do wellbeing support with them. We might do a wellbeing strategy. We work with them to raise awareness of our support, advice and information. But anyone that comes to us, everything's completely confidential, so no one's going to find out. You know, as a bank employee, your bank's not managers, the bank itself is not going to find out unless obviously you tell them. So yeah, so we do share sort of high level stats and things, but again, nothing's identifiable. As I said, our services are completely free. There's no membership, no subscriptions, anything like that. And yeah, so in a nutshell, we provide information, support and advice for current bank workers. It's for former, so if someone's worked for a bank but perhaps has moved on to another industry, or someone that's retired from the bank as well. And I think something that's really important as well to know is that we also provide support for families, their families, so a partner and any dependent children as well. So as I said, I'll just kind of talk through what we do sort of broadly and then kind of touch on the cost of living. But I've picked out a few of the areas that we support sort of in the main, and then there's lots of other areas that I'll mention. But in terms of mental health, obviously, everyone's aware in the room of the statistics and what's going on there, you know, the long waiting list, things like that. Essentially, we work with expert organisations that we call our partners, such as PAM Wellbeing and Relate, that provide a service to us. So we fund them to provide that service, and they're able to offer counselling and other therapies like CBT. We tend to work with Relate as well for children and young people's mental health. And we also work with an organisation called Kooth, which is an online platform for children and young people. And again, much like across all of the areas that we support, we can provide financial grants for wellbeing. So it might be anything from a gym membership to other ways that you might need support. You know, if you're off longer term sick and struggling and need sort of a grant to kind of keep you going while you're waiting for benefits or something like that. I thought I'd touch on sort of one of the cases that one of the ways we've helped, just to kind of give an example. We supported a guy a few years ago that had been diagnosed with depression. He was managing it, he was getting treatment, and then obviously COVID hit. He was felt very isolated, being on his own. He had a really stressful job at the time, and it was just becoming very overwhelming. So he got in touch. He'd actually had some counselling sessions through his employee assistance programme. And I think there's usually a cap on those. So once he'd had those, he felt that he needed more. So we were able to fund that for him through one of our partners, which was great in the terms of the fact that he could then, you know, remanage that situation, and he found them sort of very effective. And essentially he'd been off work, so he's able to go back to work, which is great. Another area we can support is with relationships. Now, this can be anything from couples counselling, which is often what people consider when they talk about relationship counselling, but also for families, you know, if they've had a traumatic event, or for individuals even. So in cases whereby someone has perhaps been a carer or is a carer, relationship and to their partner, and that relationship can change quite a lot, and they may feel that they need some counselling for themselves to kind of, you know, because that dynamic's changed. As I say, so there's various types of therapies that we can offer through Relate. Also around disability and caring. So we know that we obviously support anyone with disabilities. We often see that people with disabilities or a caring responsibility have something like 20% higher costs than perhaps you might otherwise, and often this can affect people that are caring or being cared for in many other ways. So financially, it can be a problem. We've got things like, you know, it can affect your mental health and well-being. It could be physical health as well. So we're able to help with things like recommending equipment or adaptations and treatments. It might be making sure that people are getting the right assessments or accessing benefits, looking at ways someone might be able to live more independently, and potentially providing counselling and other alternative therapies that aren't provided through the NHS. In terms of grants, we're able to pay for a really wide range of things. So from household appliances, maybe respite care for the person being cared for, or indeed the person that's doing the caring. It might be a bit mobility equipment. And then we can also pay for things like home adaptations. We often do this in line with, you know, maybe local authorities or other organisations that are out there and do sort of a joint funding on this as well. Again, sort of something that's obviously that we're talking about at the moment a lot is finances. So as we've known sort of since beginning of time, really, you know, it's not necessarily sometimes about not managing your money. There can be a change in your circumstances, obviously, like we're seeing at the moment. It might be a partner's been made redundant, something unexpected crops up, and even with some savings, it can really have a massive impact on your finances. And then, of course, we look at things like supporting with debt. And again, it's not always about not being able to manage your money. Sometimes it is purely, you know, there's been other things going on, and you've had to put things on credit cards or that kind of thing. Again, we can support in many ways. We can support clients to manage their money if that is the case, and just ensuring that they are getting all the benefits, any grants and schemes that are out there that they need. You know, if they need to be setting up budgets. We also work really closely with Step Change Debt Charity, so to get their support, so we can link our clients in with them. And it's just making sure that they've got all the support they need as well. Again, another sort of, just to kind of give you an example of how we might support someone in this way. We had a lady that had moved out of her flat with her son. The landlord had said he was selling. Unfortunately, there was no council housing available. She had to move into a more expensive flat, and over time, because obviously her benefits kept changing, depending on how much she earned that month, she fell into tax arrears. The problem here was, because she was in tax arrears, she wasn't able to be eligible for a council property, and until she got council property, she wouldn't be able to save, obviously, to pay off the arrears. So you're kind of, as we see, a lot of people are just stuck in this really vicious cycle. We were actually able to help pay off her arrears, provide some additional funding for her to get sort of set up, and then she was able to actually move into a council home and get some control of her finances. Again, other areas that I've touched on is welfare benefits, again, providing assistance and support to access benefits out there. Often, you know, we know that there's a lot of benefits out there that aren't claimed. People aren't necessarily aware of them, so our team can support with that. And also bereavement counselling as well. Again, we can provide counselling for bereavement. And there's other areas we support with, like, you know, offering legal advice, housing, addiction issues. It might be domestic abuse, unemployment, and neurodiversity. And that's just some of the areas. Obviously, we always say to people, if you're struggling with something, then do get in touch and we'll see how we can help. So that's just some of the case studies. And essentially, so how you can get in touch, or how clients can get in touch. We do have a website, we've got guides, action plans, we've got various apps and things like that. Obviously, as a rep, feel free to take a look yourself, and then obviously do encourage people to have a look and see if there's anything on there that might help. And again, everything's free, so there's no, you might register for an app, but it's all free. And just to explain a bit about our client advisors and our support team, really. So, you know, obviously not everyone wants to go online. Sometimes it is really important to speak to someone. Our phone lines are open Monday to Friday, 9 till 5. So our client advisors aren't actually counsellors, but if you do come to them, they do offer a wealth of experience. So it can be anything. They've got backgrounds in housing, benefits, disability support, debt management. And so essentially, if you speak to a client advisor, they can talk you through what's going on. We often find that, you know, you might present with a financial issue, but there's lots of other things going on. So we can kind of talk through all that and then work out what's urgent and what needs support initially, and then we can kind of move from there. And as I say, it might be a referral to a partner. It might be that we provide some financial assistance. So it is quite unique to be able to do this. I know the other charities, and certainly the insurance charity will offer the same. But certainly in comparison to with the bank's employee assistance programs, they provide a lot of information, support, counselling, lots of services now. But one as I say, what's unique here is that we can provide financial assistance in terms of one-off grants. So it depends on someone's circumstances, and it isn't a loan. As I said, everything's free. You're not expected to pay anything back. We do offer lots of different types of grants, and it's often that, as I said, it's around providing that support when there's a sudden fall in income or your circumstances have changed, and to be able to get you back up on your feet to move forward. And it might be sort of long, but then again, it might be longer term things. So mobility devices that I mentioned before, mobility aids, things like that. There are obviously things that we can't pay for, like paying off debts, medical fees or care home fees, but it's always worth getting in touch to see what might be available. I will briefly I mentioned our partners, I've just kind of popped them up there. But essentially, we do have a criteria as well. Being a charity, we need to make sure, we're spending our funds wisely and as per our objects. So we do look at every client on a case-by-case basis. As I say, this is our eligibility criteria, but we also suggest that, if someone comes to us that has very little banking experience, service, for example, that they do get in touch and ask, because there have been many instances in the past where someone's they may have had not very much service, but they are in really quite a dire situation, and we will always do what we can to help. So whether that's, in some cases, obviously if someone's not applicable for a grant for whatever reason, it might be signposting, and sometimes that can be just as useful, but we will do as much as we can to support people. And as I said, it is often in line with other funding, other organisations, to make sure that people are getting statutory support, and when we're linking them in with statutory support, it might be we always suggest they go to their EAP, as I said, and making sure that they're getting everything they need as well. So yeah, just to touch on the cost of living, really, we have seen, obviously, I imagine, like very much, like everybody, a huge rise in the number of clients that have come to us in the last year. In fact, it's the most clients we've seen in a year, and broadly this is due to the cost of living crisis. Again, as sort of Linda said, it's people's expenditure just is not matching their income. There's way more expenditure going on with priority bills, so the gas, electricity, and mortgage and things than they're able to afford, and their salaries just aren't matching that. And then there might be other instances where people are on long-term sick, or, as I say, another situation crops up, and often where people were managing before, they're now being pushed into that financial vulnerability. And so, as I say, when someone gets sick, or something, like a boiler's broken or a car's needs fixing, whatever it might be, that just pushes people into that situation where they just can't afford those expensive items. And even with savings and things, we've found a lot of our clients coming to us, and some might have savings, but they've dipped into them along the way, and then it's got to a point where something big goes wrong, as I say, and they're just unable to afford that. So in the last year, we have put specific grants in place. So we've had the cost of living grant and an energy grant, alongside what we call a general living expense grant. We don't tend to kind of promote these as specific grants, because I think our point is that we just want to ensure that people come to us if they are struggling with whatever that might be. And those grants are there for us sort of internally, really, just to make sure that we know we can sort of see where people are coming through and why they're coming through. So yeah, so we're kind of we've put that in place. We've also found that we've needed to we've put we've had to flex what we're doing in terms of the grants, so and our processes. So whereby people would come through, we'd have a quick sort of a chat to see what was going on. We'd book an appointment in to talk through the areas like I mentioned. It might be you coming through because you're struggling with finances, but actually your mental health's not too good and you maybe need relationship counselling. And we kind of go through all of that. But what we found in the last year is that actually people are presenting with the fact that it is literally they're doing what they can, but they are struggling. And as I say, their expenditure is just their income just isn't meeting their expenditure. So what we've done is try to, when that has been, you know, immediately obvious, we've tried to ensure that we can get that grant process moved forward if that's what they need, more quickly than perhaps we would have done before. Just to make sure that that urgent need is dealt with, you know, a bit more quickly. So as I say, we've done that, but also sort of quite importantly, I guess, that we're seeing by the end of our financial year, we'll have spent something like 30% more on grants than last year. So we're already seeing, and we don't necessarily see that that's going to change going forward. So really just to recap a few kind of points about, you know, how we can support what we do. As I say, anything around physical and mental well-being, as long as obviously cost of living is, you know, something that people are coming through with. We can offer cash grants as well as services and support via our partners. We do provide continued access. So obviously grants and support is as initially kind of as a one-off, but you know, we do find that people, obviously circumstances do change, and we do encourage people to come back, but we do obviously encourage people to do as much for themselves, especially financially, as they can. You know, we might offer debt advice and things like that, and also temporary and contract staff. So we're able to support temporary and contract staff, not just kind of full-time as well. So there is a way to keep in touch if anybody wants. I know the slides are going to be sent to you, so you know you can sort of sign up for our wellbeing emails and do keep in touch, see what we're up to. I'm on LinkedIn myself. You know, it'd be great to kind of link in there. But yeah, if and I've got all the details on there about our helpline and obviously getting in touch via the website as well.
Brilliant. Thank you so much, Samantha. And yes, as you say, all that information will be available afterwards, which we'll make available. So we are going to have a break now until just about 10 past, about 6 minutes, and then when we come back, we'll hear from the other two as well. So we'll see you very shortly.
So Nick, there's a question for Sam about, does the bank workers charity support building society workers, in the chat?
Currently we don't, I'm afraid, but I think it's something that's been talked about for the last few years, so it may be something we do, but currently no, I'm afraid not.
It is something that we were really looking for in terms of the wider financial sector, as we've got obviously some from the insurance sector, some from the banking sector, and what we found is that a lot of building societies have their own, each individual one has their own charity which may look after. So I would point each person in that direction. And just to pick up on point that Kevin put in the chat there, I think it's really important one that reaching out to these groups is the first step, and even if they can't help you, you should at least be asking the question rather than assuming that you're not, that you can't be helped. So okay, well, thank you very much, Sam. And next we have the money charities, Rhiannon Byers. We also discussed earlier on, Rhiannon has quite a large financial services background as well. So Rhiannon, over to you.
Thanks, Nick. And shall I go for about 15 minutes max and try and get some time for questions too, maybe, just given how we're going? Yeah. Cool. Yeah, I do. Yeah. I'm from the Money Charity. I've joined the Money Charity in April. I head up their workplace and community programs there. But yes, since my former life, I spent most of my career at the Financial Conduct Authority, and I left just as they were going through a very interesting period of increased union membership, but there was still no recognised union there when I left. But I'd been a member of the Staff Consultative Committee for many years when I've worked there, which was their equivalent kind of alternative to a union where there wasn't a recognised one. There was lots of stuff going on there, striking and all sorts. So yeah, it's a small world, definitely. And I was only speaking to someone last night, Sam, about the Bank Workers Charity had been into their organisation. They worked at the Bank of England and they were talking about a presentation that you guys did. So yeah, it is a very small world. So perhaps what I'll be able to do today is kind of bridge a little bit between the very kind of big picture, really helpful and insightful kind of conversation that Linda kind of kicked off, and then also that very individual perspective for perhaps very specific people from a certain part of the financial service sector in terms of what does the Money Charity do and how do we help kind of build financial well-being and support employees within their places of work. So I'm going to just talk about these three key areas on the agenda, a bit about what we've seen, but generally I maybe just stepping back for a second, setting the scene a little bit. And just to say, who are we at the Money Charity? So we are the UK's financial capability charity. Our vision is that everyone achieves kind of financial well-being. That can be a combination of resilience, but also actually we have a positive message about money that ultimately, we want to enable people to kind of achieve what they want to achieve within their life. So it's been challenging to maintain that positive message given what's been going on at the moment, but that's absolutely the core of what we do. And we do that by trying to empower people across the UK to build their kind of skills, knowledge, attitudes, behaviours, help them make the most of money throughout their lives and achieving those goals, whatever they may be. And we do this in a number of different ways as a charity. So we work in schools and colleges to reach young people in their place of education, and we deliver hundreds of workshops, month on month, and have just this year, just last year, at the end of last year, we've reached over 250,000 young people now in the activity in that part of the charity, so a major milestone for them. We do lots of bespoke projects where we work with different organisations, financial services organisations, employers, community groups, charities, like kind of specialist kind of projects around supporting financial well-being, and I'll mention a couple of those as we go through in relation to how we've worked with different unions. Trade unions. I head up this workplace and community area. So how we reach adults with our kind of our offer is through either their place of work, which we call the workplace, or also through their local community. So we deliver primarily workshops, webinars, sessions to groups of individuals on lots of different topics to do with money, specialist areas, pensions, credit and debt, etc. But generalist areas, we talk about the concepts of financial well-being, those fundamentals, and we talk a lot in the last 12 months specifically around the cost of living crisis in those. And that's all about helping to kind of build people's confidence, knowledge, break down taboos about talking about money in the workplace or in their kind of local community and their families and friends. And yeah, it's a modular approach that I'll explain a little bit more detail as we go through. Behind the scenes, we do influencing work. We have good relationships with lots of different financial services and government and policy making areas, and we influence. And just might be useful if you're trying to pull out some stats to kind of make cases within your organisations. We have the monthly money stats, and you can sign up for those on our website, and you can get some stats in your inbox about the state of the nation type stuff that Linda touched upon about inflation, wage growth, debt levels, how it impacts people who are in work. We have a record number of people in work, but yet we have in work poverty rising at this time. So some helpful things there perhaps for you. We do think we're a bit unique. I think all of the charities here today are really valuable and unique in what they do, but the way in which we're unique is that we are a national charity and we do specialise in independent, as in we don't recommend any financial products or services. We're unbiased, so we don't make any judgments about the people who are receiving our kind of training or education in our sessions. We are there for everybody. We're a series of experts behind the scenes, people like myself and many experienced trainers and whatnot. Yeah, and we're there for everybody at all kind of ages and stages, regardless of their background. You know, we have worked in many different financial services organisations, just kind of turning to that workplace angle for the moment, and have found a lot of interest in what we do and value. I think some things that in particular are kind of working is our impartiality. So we're an independent organisation coming in and starting a conversation around finances and money, and that can help when actually it can be quite a challenging and difficult topic for people to talk about in financial services in particular. And also, you know, hopefully what we do reaches the people in all parts of the pay grades within any organisation, and in financial services there are many people at lower pay grades as well as kind of more what might be the stereotype of what someone who works in finance looks like. But we are also there for those people who might experience different types of life events and, you know, redundancy or whatnot. Anyone at any time can experience kind of challenges to their financial resilience, and we're there for everybody to make the most of what they've got. It is a horribly challenging context, so the cost of living is what we're talking about today, but we have been here for 25 years. We've seen a massive uptick in interest in what we do, sadly, because of all these particular drivers. But overall, we had a baseline as a country of pretty low financial resilience, knowledge, confidence, skills. And that is, it all goes back to that thing. We are not taught this well in school. It's been on the curriculum since 2014. That is not consistently kind of actually taught. And so charities like us and teachers and all sorts, they're making efforts to kind of address and change that. But we kind of have a systemic kind of imbalance, I guess, or kind of issue. And there's a lot of links, as Samantha's completely pointed out, around how it links to mental ill health, kind of not being confident or comfortable with money stuff, having money issues can link to all of those things. But it's not just about having that financial resilience. What we talk about is the kind of having the tools in your toolkit to know if something happens, you can spot it, you can know where to go, you can feel confident to push for your rights, that type of thing. So yeah, an interesting time. So, I mean, if you're looking to make the case in your organisation for our services, what we talk about is that kind of two sides of a coin, the carrot and the stick. So why do we think employers should focus on financial well-being? Why should they take responsibility for this beyond setting the pay and offering certain benefits and things like that? Why should they take this broader responsibility to help individuals build their financial well-being? There is lots of research that says, you know, actually people experiencing pressures and problems really affects their ability to perform their job. It can lead to absenteeism or presenteeism. Someone's mind is not on the work, they're there, but they're just worrying, especially if they're in a role where the consequences of having a mark against your kind of credit file or something can be much more severe if they're in a regulated role, for example. And indeed, research shows that if you do focus on this, it works well to support people's mental health, for example. And actually, we are in quite a tricky hiring environment as a country. So with all of this going on, it doesn't really pay to be in work sometimes, but it is absolutely quite difficult to hire good people and keep them. And employees are now reporting kind of financial well-being support in that broader sense as something they really value from their employers. So it's retention and attraction, as well as prevention of, you know, poor performance and absenteeism and things like that. So we talk about that, we try and make that case, and we think what we've seen tells us that most industries in most parts of the UK are really hearing that and doing stuff. So and financial services generally are, different firms are full of are a full part of our pot of who we work with in terms of the employers that we are approached by. I won't spend too much on this, but I just want to touch on the idea that there is this spectrum of financial wellbeing support that exists. It's hardships. What we see that meaning is hardship support, hubs for information, tools, signposting to the right organisations who can help you more individually at that right time, depending what's going on for you. Education, training, confidence skills, knowledge building sessions, which we kind of do through workshop and webinars. And some organisations are also doing money mentoring programs where they're building capability for individuals within those organisations to help other staff, you know, with their kind of any issues and act as that bridge or signpost, and talking about it around whatever your organisation's strategy is, what your union strategy is in relation to financial wellbeing, talking about it regularly, more than you might think, and regularly connecting the dots to people about how it all fits together is shown to really help. And there are a lot of tools that exist. There's resources the Bank Workers Charity have, but also kind of tools that we can direct organisations to if they're looking to build this, and that's formed part of what we've done with a couple of unions over the last few years as well. So yeah, here's another way of looking at it. You can go through this life cycle, and we can walk people through that cycle and work with them on a project or whatnot to help organisations to work that through. But just going into the statistics of what we offer, because this might just be what you need today, just to know that and to take that away as an idea to consider. We deliver a range of different workshops and webinars. We do this virtually or face-to-face, and we have this programme of money mentoring. What we do in the workplace, it comes with a cost. It has a price plus VAT, and we feel it's very affordable. But by doing that, we kind of that income generates then supports the wider work we do as a charity. So it supports us to deliver our work in community organisations, which they experience free of charge, in schools, etc. So it's all part of the fabric of what's the most effective way to reach people. We have a big menu you can choose from. Normally our small groups are up to 20, and then webinars online we can do larger groups as well. And these are just a few of the organisations we've worked with, but in 2022 we worked with over 200 different organisations. We reached over 7,800 people, either in their workplace or community, and over 20,000 young people as well. And you'll start to see some names of maybe organisations you recognise within the financial services sector within there. Some I haven't put on there, but just to kind of mention in case there's a connection in the room, people like starting at Atom Bank, Aldermore, the Building Societies Association, etc., could go on. And actually Aldermore is one of our funders. My old employer, the FCA, has asked us to come in and do various different things for them. And we've also worked with both Unite and Unison on kind of more bespoke kind of sessions and programmes where it's kind of connected the dots, maybe in terms of what they can offer their staff in whatever context. So sometimes this is with like a regional union kind of like trade union office, or it's the national. And so we've kind of tailored what we've done and run this particular programme which they've advertised in a certain way. And that's always an option if anyone wants to approach us to do that type of thing too. We have a kind of a consultancy model where we can cost that and do that in a value for money way. And just to touch on what we've seen, we have seen unprecedented levels of inquiries for these sessions. We have doubled the number of sessions that we've delivered, and we've reached all these different different employees, 180 different employers and 60 or 80 community different organisations. People want our virtual stuff, they want our face-to-face stuff as well. They can provide different ways of people accessing things depending on the role that they play, the flexibility of what that allows them to engage with things like this, what they feel comfortable with engaging, you know, what's the safe space to ask the question, and the focus in terms of the topics. It's not been just kind of those fundamental topics, budgeting and keeping track. We do a session on that. We've done a lot on cost of living that's weaved into all of our different sessions. We look to equip people with knowledge about what are the key benefits and schemes that they can access. That's changing all the time, so we're updating it on a monthly basis, waiting for the budget next week. Thinking also about what the rising interest rates mean for people, because although this is a new reality now, especially for younger workers entering the workforce. They've never experienced interest rates like this, and if they're thinking about borrowing, if they've got borrowing, there's kind of a step change in behaviour that unfortunately as individuals we are expected to act upon, and it's the burdens on us. That's unfortunately how we're structured as a society. And but also on the other side, savings, it really actually pays now again to move your savings around, whereas actually for a long period of time it's stability was and the low interest rate environment meant that wasn't as an effective use of your time if you had quite limited time to engage with your finances, perhaps. So yeah, and we do focus on different groups. We have a Women in Money session. We'd love to do more in this area because there are particular things that women experience and systemic inequalities that are not always kind of people are not always aware of, that they're already starting at a different place if you're a woman in the workplace, and also young adults because of the particularities of what they experience. They're experiencing as that new generation of adult workers now. And some progressive employers have been exploring our money mentoring kind of schemes and programmes, which we're really excited to work on too. Just so you know, it works, and we feel confident it works and it means something to people. It fits alongside other things like paying rations and paying a fair wage and supporting people in crisis, but we do feel it fits in, and we do robust impact and evaluation because as a charity we kind of required to and we want to, and this is the type of impact that we have, and people tell us after 1 hour or maybe more, but could be just 1 hour, that they feel more confident around where to go, about what tools exist to help them, their own personal abilities. Maybe they've heard something told back to them that they do and they think, oh, actually I'm doing something right here. Willingness to talk about money, 23% increase, that's huge. Decreasing people's worry, and generally hopefully getting a good service from us because we are providing that service. So that's kind of a snapshot of what we are about, what we do and how we do it. There is a lot more information on our website, including specific information about our workshops, but I think in the interest of time I'll pause and see for questions, and then Nick, you guide me if you want me to focus on anything else as well.
Thank you. Yeah, I mean, really interesting there. And just a quick question, really. You mentioned the Building Society Association. Were you working with them as an employer, or more in their regulatory capacity?
So that was from a couple of years ago, a project where we helped them build a programme for their colleagues to go out and help people within their local community. So I guess it speaks to that spectrum of expertise and goals that we have. So often we find ourselves talking to organisations like Aldermore, like the Building Associations, about helping customers, colleagues and their community. So actually there's a role for employers to play and a lot of financial services organisations have high aspirations that they do all of those things. So they support their customers well, they treat them fairly, they are embracing the consumer duty, they're thinking about colleagues and making it a good place to work and a fair and reasonable place to work, and then they want to make a positive impact in their community. So that was an example of the BSA project. But indeed, many of our funders are our corporate funders are financial services organisations as well, and so they're kind of living and breathing that aspiration too. But like Samantha, we are independent, of course. So yeah.
And I guess I had a question around, because you're obviously looking at employers, and hopefully some people in the room will see this opportunity to go to your employer and say, well, this is available, it may help your stuff. But I was wondering whether or not you've ever worked with a union directly to actually provide the similar sort of thing to members, like as a union offering.
Yeah, so that's the examples I was talking about with Unite and Unison, where
Right.
they approached us, and at various times we've had relationships with either kind of local or more national kind of contacts, and developed programs. So they've kind of been delivered through the membership pool, instead of the audience being an employer of X. It might be just anyone who is a Unison member, or it might be in a local region. They might have a focus on the police that they support, the police organisations that they support, or they might tailor it that way. But it's been a union that's led the conversation with us and contracted us for services, that and often that means doing something a bit different and tailored in terms of what support the union can offer, and raising awareness raising of that as well. Because just like what Samantha's got in the bank, in the banking world, it's amazing to have some extra, in different sectors there are these extra kind of sources of support and information, and people don't always realise how far they can go to get that individual support, which we don't provide. We're much more group led. So. No,
sure, and I think it's working as in the union or as a staff association, a lot of our work is obviously organising those group events to get to a wider group, but also to I guess raise or challenge or whatever it might be with the employer to say, hang on, actually we've got this issue over here which you don't necessarily know about because people aren't coming to you about it, but trust me, it is an issue. So it sounds like there's an opportunity there for some of the colleagues around the room to actually put that in place, whether it's with the employer or through their own union themselves.
Yeah, we can feedback on like level of attendance, and on an anonymous basis we can feedback the kind of the question, like the feedback stats there, only if the numbers allow it to be anonymous, and people might leave comments on kind of what and things like that, so we can be part of that dialogue about either making a case or strengthening a case about what people need and want at this moment in time. Yeah,
and there's been a couple of comments in the chat box around we did look for our building society equivalent to Samantha and Victoria, and we struggled to actually see something there. But I think especially for our building society colleagues, this could be something actually which fills that apparent gap, which we're still looking into. So I encourage them to get in touch as well.
Yeah, we've had relationships with a number of different building societies in different ways, but they're less common maybe in terms of bringing us in. And I think there's sometimes maybe an unfair burden put on individuals within financial services organisations to kind of share that knowledge or build that capability. I think our independence is just something that it just takes that off. Like, we will have the similar expertise of what a building society HR team or whatever has, but we can come at it with a bit of an independent kind of packaged kind of way of supporting. But we do work with some of them, but not across the sector like what you're describing.
Yeah, brilliant. Thank you. Kevin, anything else from yourself?
Yeah, just from me, and I think just really to re-emphasise that point about liking the independence, because within the financial sector there are often rules and regulations or policies and procedures that actually relate to your employment or your status within the organisation and your financial well-being. And so, that ability to go somewhere independent from the employer to have that conversation, I think is critical. Just wanted to emphasise that point. Thank you.
Excellent. Well, thank you very much, Rhiannon. We'll move on now to Victoria from the insurance charities. So, Victoria, you want to introduce yourself to everyone?
Hi everybody, yeah, I'm Victoria. I'm the Marketing and Comms Manager at the Insurance Charities. I've been there for about 4 years. Insurance is not my background, so quite a new area for me, but I'm loving it. It's a very interesting sector. So yeah, like the others, I'm just going to talk about the help that we can provide for people in the industry. So I'll just go through a quick presentation, and at the end, obviously take any questions if that's helpful for you. So thank you for asking me to speak today and tell you a bit more about the charity. You may wonder why we're called the Insurance Charities, plural. We do get asked that quite a bit. The Insurance Clerks Orphanage was founded in 1902, and then the Insurance Benevolent Fund was founded in 1929. And both of these charities eventually came together about 100 years later to form what is now known as the Insurance Charities. That's why it's plural. We're the only charity solely supporting current and former insurance employees throughout the UK and Ireland. We can help transform insurance people's lives for the better, providing a lifeline for as long as it's required. We can also support the dependents of eligible insurance employees, such as partners and children, so much like the Bank Workers Charity there. So as a guide, we help people who've had ideally 5 years work in insurance within the last 10 years, or with less than 5 years if your insurance has been a major part of their working life to date. So, for example, if insurance is your first job after college or university and it's the only job that you've had, then we could perhaps help you if you meet our other eligibility criteria. We can also support those who are receiving a pension or a deferred pension associated with at least 5 years in insurance. Applicants need to have suffered an element of misfortune, and by that we mean something unexpected that's happened. That could be domestic abuse, redundancy, tragedy, ill health, all sorts of things like that. But we would always encourage people, like everyone else has said, to get in touch if they're not sure about their eligibility, and we can have a chat. So what support do we provide? So there are several ways that we can help. We can give regular financial support where income is restricted or insufficient to cover things such as day-to-day hardship and costs associated with disability and ill health, such as therapies and hospital travel. Financial assistance might be on an outright or a charitable loan basis. We can provide one-off support by financing an essential item, such as equipment to help someone with reduced mobility, property adaptation work, which cannot be funded by local or central government, the replacement of a household appliance or essential furniture. We also signpost individuals to specialist advice during difficult life events such as depression or loneliness. And we also give practical support to those with difficult health, money management and housing concerns. Our help might be needed for just a short period of time. For others, our involvement might need longer, sometimes years. So here's a snapshot of just some of the ways that we've helped our beneficiaries in the 2021-2022 financial period. As you can see, some payments we make are quite small, but they can still make all the difference to those who need our help. Other amounts can be life-changing and can result in people being able to remain in their homes or care for loved ones who might be critically ill. We've sadly seen an increase in the number of people approaching us who have experienced domestic abuse. In some cases, we've helped people start again. They've had to move to safety, perhaps at short notice, with few possessions or access to funds. During the pandemic, we saw the number of domestic abuse cases rising as victims were often isolated at home with their abusers and with fewer opportunities to reach out for help. In 2021, we sponsored the revision of a domestic abuse toolkit for employers. It was initially launched in the insurance industry, but it's available to everybody. It was originally published in 2018, and this resource was co-authored by Business in the Community and Public Health England, and it's suitable for employers of any size and sector. This toolkit is available on our website in the employer section if you'd like to get hold of that for your organisation. And like everyone else, our welfare team has seen a much greater number of people highlighting mental health concerns, in addition to other challenges that they may be facing. The cost of living has almost definitely added to this. So around the cost of living time, we provided an uplift to the grants that we were giving for things like food and essential items. And we also encouraged people that we'd helped before to come back to us if the cost of living had begun to impact them, even if they got back on their feet previously. We were really delighted in the last couple of years to work with a mental health charity in Ireland called Aware to provide CBT, because again, it's very difficult to access and that obviously comes at a cost. So for the last few years, we've been helping people in Ireland, which has been a really great initiative for us to work on. So some common questions that people ask about the charity. I expect, like the other charities, there's often some misconceptions about who we can help. So I thought I'd address a few of them here, but they are very similar to others. So again, we're independent and we're not linked to any employer or membership organisation. A lot of benevolent charities are linked to a particular professional body, but we are separate from that. So that people don't need to belong to anything to get our help. Both working and non-working people can apply, including people that are retired, on maternity leave, or if they're looking for work. Applications can be made at any stage of your career if you worked in the UK or Irish insurance industry and you meet all our other eligibility criteria. It doesn't matter what role you've had in the industry. You might have a traditional insurance role, such as loss adjusting or underwriting, or you might work in the marketing department or IT or on reception. So it really isn't role specific about accessing our help. People often ask if they need to repay the financial support that we give them. Unless we've offered you a charitable loan, you wouldn't need to give that money back. Again, often people worry that their employer will find out that they've gone to us for help. Providing the applicant can prove that they've worked in the insurance industry, so that might be with a P60 or pay slips, pertaining to the 5 years that we're asking for. It will be completely confidential unless, of course, like Samantha said, you choose to tell your employer. And we do hope that people are able to talk to their line managers and HR teams about problems that are going on, but particularly in regulated industries, that might be not something that they want to do. So if people are wondering about the application process, it's fairly straightforward. We've got a simple online application form which gathers sort of basic information about why people are approaching the charity. We'll confirm that we've received that. We'll then have a call with you to talk through the application process. We might have a face-to-face meeting with a network of volunteers that go into homes to speak to people. And then the application will go to our grants committee, and once the decision has been made, we'll try and get that decision back to you as soon as possible. So as long as people can provide the information that we need quickly, we can obviously hopefully make a decision back to you quickly as well. It's all about the information that we get. This is a quick project that I quickly wanted to talk about. It's not specifically related to the cost of living, but obviously with people, if they're in a caring role, then that can impact on finances. So we know that an increasing number of people are affected by dementia, and that many want to support people going through challenging times. And it's estimated that almost half of the 300,000 people working in insurance will be affected by dementia, either directly or through a loved one. So we were delighted to launch a partnership with the Alzheimer's Society, offering insurance people fast-track support to a dementia advisor to assist them or a family member. So we're an official Dementia Connect referral partner, and anyone working in insurance can contact us and we can refer them quickly over to the Alzheimer's Society to get the support that they need. And they can help with things such as legal documents, lasting power of attorney, benefits entitlement, or just connecting people to local groups within their area. And this service is available for people with or without an official diagnosis. And people with dementia are also at high risk of experiencing loneliness. The COVID situation obviously had a massive impact on that. So the Alzheimer's Society launched an initiative called Companion Calls in COVID, which was a befriending service whereby people gave up to an hour a week to make friendly calls to somebody that was isolated, perhaps a carer at home. They've actually kept that service, and we can offer that volunteering opportunity to the insurance industry. So it's just a nice thing to do. So if anyone's interested in that or they want to share that with their colleagues, then all the information is on our website. So our partnership with the charity Shelter UK enabled us to refer insurance people to them to benefit from their in-depth housing advice in conjunction with our financial support if that's needed. So Shelter's recently reported that there are at least 271,000 homeless people in the UK, with this figure expected to soar as rents have gone up and the cost of living is obviously going up as well. So Shelter can provide help with people who need assistance around things like homelessness, tenants' rights, if people have gone into mortgage arrears. So again, if anyone in insurance is worried about a housing issue, we can come to us and then we can then fast track them over to the service that we have with them. So we're obviously delighted to receive feedback from our beneficiaries throughout the year and hear how our work has had a positive impact on them. You can read some more in-depth case studies on our website, but these are just a few comments that we've had in the last year. You know, people are proud and they often don't want to ask for help. So I think coming to charities like us and the Bank Workers Charity is often sort of the only way. So, I mean, if you go away just remembering one thing, I hope it's that the insurance industry and the banking industry has got a really great resource in these dedicated charities. It's a resource that you or maybe somebody that you know could benefit from. And by referring a current or former colleague to us, then you could really help someone, prevent them from going under. I think the last few years have shown us all that, you know, things can be unpredictable and we all go through challenging times. So I would say, please don't hesitate to get in contact with us. If you've got any questions, if you know the colleague that might need our support, you can apply online. We really would encourage you to talk to everyone in your organisation, whether it's particularly those in HR, wellbeing, CSR, all of those people. We want to put the charity on their radar. We've got an awareness week coming up in June. It's an annual event between the 19th and the 23rd of June. There's going to be resources on our website, and we're really encouraging all insurance companies to get involved so we can spread the message that the charity is here and to hopefully put people in touch with us, particularly at the moment, because we know how challenging it is. There's also a section on our website for employers and HR teams. So if you want to share the information internally, you can go there. There's posters, there's internal articles, there's social media assets, all that sort of stuff. If you want to just spread the word within your organisation, I'd really like you to do that if you can. But now I can take any questions if anyone's got anything that they'd like to ask.
Thank you very much, Victoria. I just wanted to, I guess, pick up on one thing that you mentioned, and that's regarding the domestic abuse toolkit, because this is something which is, I think, really important to trade unions at the moment, and you know, led by the TUC. It's been something which I think since the lockdowns, unfortunately, you know, it's become more and more obviously prevalent, and therefore we've wanted to try and, I guess, be a bit more equipped ourselves to know how to spot the signs or where to direct people. So I think that's a really interesting toolkit that you've put together there. So yeah, is that available again, just as a, you know, out of the box takeaway kind of thing?
Yeah, absolutely. So we sponsored the toolkit. So as I said, it got released about 4 years ago, but because of COVID particularly and some new laws around domestic abuse, it was updated because it really needed it. So yeah, it's available on our website. It's available on the Business in the Community website, which has a load of great resources for companies on all different topics. So that might be worth people looking at just more generally. It's also, there's an organisation called IDA, which I would like to highlight, called EIDA. It's the Employees Initiative on Domestic Abuse. It's a membership organisation, free to join for companies of any type. And it's on there, but if you join there, you can access events, resources, you know, particularly if this is the beginning of your journey in terms of supporting colleagues around domestic abuse. It's a huge topic. You know, it's a very important topic, a life-saving topic. So if people join there or just look at the website, they can access some stuff. That toolkit is a really great starting point in terms of, you know, embedding policies, culture, you know, and things like that. And also that can impact on people's finances. You know, there's a lot of control around money sometimes. So in addition to the cost of living, you know, if people have their access to money cut, that is another issue on top of that. So it does kind of link in. I just thought I'd mention it because, you know, this all relates to people's money, and we probably, like the Bank Workers Charity, help people that, you know, might have nothing and they can't get hold of any money. So we can, you know, get them set up again and into a new home, perhaps with new furniture, that sort of thing. We have helped people do that, and that's men and women.
Oh yeah, no, absolutely. And I think whenever there's any kind of, I guess, widespread hardship, that's when you're going to see things like that happen. And, you know, so I absolutely think that that's relevant to it as well. And I just wanted to, again, highlight to people here as well your work on dementia, because, I mean, if my experience is anything to go by, I think, you know, a lot of people in this sector are encouraged to actually do volunteering as part of their work. And I think it's been mentioned before, you know, and employers in this industry want to show that they are doing their thing for their local communities and taking their responsibilities there seriously as well. So, you know, if anyone has wants to look at how they can help with that, then
the thing is, I was going to say, Nick, that actual opportunity is obviously not just for the insurance industry. We have that partnership that sort of offers, but that opportunity is there for anybody. So if people did want, that were in banking, for example, you know, they could go to the Alzheimer's Society website and look for the Companion Calls initiative, and I'm sure there'll be a section there about, you know, volunteering. We just have that partnership and promote it through that way, but it's open to everybody. It's really great. It's an hour a week on the phone, and people love it. It's just a friendly chat about, you know, what you watched on TV and that kind of thing. It's not an advice giving service.
Great. No, thank you very much. Thank you to everyone. We've had some comments in to say, you know, really great presentation by everyone. So I really appreciate that. And I think, you know, again, it's the point of today is obviously to allow people to know what support is there. You know, the charities, things like the insurance charities, the bank workers charity and the money charity, that they're all, you know, almost benefits of being in employment in this sector, etc., rather than seeing it as kind of a handout as such, you know. And I think that people should look at it in a different way, as in, you know, you're in this sector and these things are available to you, and also you have people like the Money Charity who are there to empower you to take control of things yourself and you know, make sure that you don't necessarily get into hardship in future. So, you know, I hope everyone can take something away from this, and you know, which will help either yourselves or your members, and or you can approach your employers. I'm guessing that there is literature for everyone available on the websites that have been put up if you need that, and that the individuals involved, you know, I'm sure I'm more than happy to speak with anyone to set up a closer relationship and to work together going forward. Kevin, was there anything else that's come through you wanted to mention?
Yeah, so a couple of things just struck me. Victoria, is it possible to unshare your screen? So
apologies. Yeah.
So I think it's something that Rhiannon particularly sort of alighted on, but I think is that relevant one as well. So all of you really to this one. Actually, all of you to two. I'll give you two questions. The first one then is, there's often the assumption that it's the people, the employees in the lower grades that need the help most. Whereas actually, I think from my experience within the insurance industry, because people are spending the money that they're spending at whatever level they're at, it can be at all levels. And Rhiannon, you referred to this, but I just wonder if there's any more you want to say on that, just again to remove that stigma. And the second one is, have you come across great tools or policies or things that employers are doing which AFF affiliates, the people on the call here today, could look at or hear about and go, oh, actually, I'll go and chat to my employer and see if they've got a hardship loan scheme or something similar to that. So anyone want to kick off on those two?
Well, I'm unmuted. Shall I speak quickly? I mean, yeah, you're right, Kevin. With regards to seniority, we help people from, you know, chief executive level, I won't say all the way down, but, you know, down to trainees and people just starting out in the industry. And I think, you know, a lot of it is the financial commitment that you have at that time, you know, the mortgage that you have and, you know, other things that you might be committed to. So if your partner suddenly dies or somebody else in the household loses their money, you've still got that financial commitment to meet. So it doesn't sort of matter whether your mortgage is £200. Well, no one's mortgage is broken, but you know, it's what you've got to meet that. And that's where the issue is. So I think, yes, there is the assumption. I mean, I meet a lot of people when I'm out and about say, oh, but you know, insurance people get paid quite well, don't they? Why on earth would they need to go to a charity? But you know, I mean, I don't need to explain, but you know, it's just that not quite understanding that suddenly things can change overnight. You know, I think in the COVID situation, a lot of insurance people were well protected, and it's probably the same in banking, by their employers to get through that time. But of course, if your partner was working in hospitality or, you know, that kind of area, they might have been impacted. So then the household income goes down overnight. So because we're having dependents, like, you know, Samantha said, it's not necessarily the insurance person, it's the wider family, and a company couldn't support somebody's partner. Yes, they can support the insurance person, but maybe not, you know, the partner or, you know, a dependent that they have. So I think that's also getting the message across, that it's for that wider family network, it's the household that we're supporting rather than necessarily just the insurance person. So that's what I would just say on that. And there's probably some probably agree it's the same sort of thing, isn't it?
Yeah, I mean, but I think you've taken the words out of my mouth.
Oh, sorry.
Yeah. no, that's absolutely, I absolutely agree with that. I think you're right. I think I have to say, we do generally see it's, you know, retail banking, you know, the call centers, things like that people come to us, but we do support anyone, and often, and reiterating everything Victoria said, but also the fact that, you know, it's sometimes it's that signposting that's just as helpful. You know, for some people that might not be eligible for the grant, we are, and I think Nick touched on that, you know, if you're not sure where to go, you're just kind of like, I've never dealt with this before, whatever it might be, then we can support that as well. But yeah, likewise, we've certainly seen, we're helping, you know, children with their counselling, you know, bank workers' children, and you know, again, domestic abuse and things like that. So yeah, I completely reiterate everything Victoria said, really.
Yeah, I mean, maybe just to kind of wrap it up, I mean, I completely agree. Two particular things you've said there, it kind of struck me. So I think there's something about the cost of living crisis. Research shows that it is permeating and impacting people's day-to-day spending much higher up the income deciles than even COVID and particular pandemic impact. So it's really reaching, so people who've never had to really think maybe in that very minute way about their budget before are really having to engage in a different way, and maybe that comes down to, I guess, that kind of the shame or the pride you might feel like, I've always coped before, and now there is not enough money at the end of the month type thing. So there's a whole different spectrum of people that's been impacted by this, but everyone has life events. Like it is so likely for most people that are going to experience bereavement, you know, all of these also exciting things, starting a family, but they all are triggers, and we live in a society that puts the responsibility on you as an individual to work that all out. And so, you know, and just because you're in financial services, you might have some tools available to you, but you might not have other tools, like, you know, in the field that you're not so comfortable with, like mortgages. When I got a mortgage, I worked in this field for years and years. I still like learn everything on the fly, trying to work all that stuff out as I went, panicking, you know. So I think the other thing I wanted to say was, and this comes more from my work in the regulator, but I just know that this call centre staff, retail, like those jobs have become really, really hard, even harder than they've been before. And the emotional overload on individuals who are interacting with the customers of financial services, the amount of money management kind of issues and helping people with like loan and arrears, that is a really, it drains your emotional resources for them to think about yourself. So I just think that's kind of something that's really going on for some segments, which are more typically lower paid roles. And of course, research also says that people with the least money are often the best at budgeting, but they're also the most exposed to the systemic kind of shocks and inequalities that we unfortunately have in our society. So yeah, on the tools and resources point, one thing I did want to flag was the CIPD has a really good area around financial well-being policy, and what is it, a good policy. You know, it's kind of a HR focused organisation, but it can be quite a good thing to tap into if you're trying to build a case to HR, and it's about what a good policy looks like, what elements exist, and they do research as well. So the CIPD stuff is maybe a tool or resource, but it hasn't already been mentioned. That might be.
Thank you. Yeah, I think that's a really good point, especially for people around this room, is that, you know, our members here are dealing with people, customers who are potentially incredibly pressured, incredibly stressed, incredibly at their wits' end, so to speak, and are potentially taking the brunt of it from those. So, you know, looking after our members who are potentially in those areas, not just from a financial point of view, but from a well-being point of view as well, is a really important point of view. So I think some of the things that have been mentioned around counselling and that sort of support is excellent as well as the stuff that I think a lot of our affiliates have been doing recently around mental health awareness and making sure that, you know, you are able to spot those signs and that your employer is actually supporting those individuals, you know, that they're not taking call after call after call of complaints, and that actually they're given that time or that space to actually pull away when they need to. Guys, thank you so much for everything. I think it's been really interesting. As always, I'm going to be taking this, doing a little bit of editing and then putting it online. If anyone wants to check back or check back on the resources, etc., we will put it on the website. That's www.alliance4finance.org. And if you have any colleagues who you feel might be of interest to this, please do let them know about it. As we said, it will be available just for a limited time only, just because some of the things may change and may change quite quickly. So thank you to Linda, thank you to Victoria, thank you to Rhiannon, thank you to Sam, and thank you, Kevin, for checking out the chat box as well. And thank you everyone for attending. We'll finish there. Bye-bye.
Bye.
Thanks, bye.